July 24th of 22 was when he was on last.
Really?
What?
July?
I don't think so.
Something more recent?
That can't be.
Yeah.
Wow.
I think it was more like December.
Okay, well, I'll get us rolling here, and then I'll keep looking.
Okay.
All right, stand by for one.
The following program was pre-recorded, and the views expressed do not necessarily represent those of this station or its management.
Gather round. It's time for your Real Estate Chalk Talk with the Hittner Group at Coldwell Banker Burnett. Listen closely as your coaches discuss the culture, the economy, and the political scene, and how it affects your home and your real estate investments. Real Estate Chalk Talk is where you learn the science of buying and selling real estate and the art of living in your home. Your education begins in 5, 4, 3, 2, 1.
Hey there, welcome to the program. This is your Real Estate Chalk Talk, brought to you by the Hittner Group at Coldwell Banker Realty. HittnerGroup.com, 612-627-8000. That's 612-627-8000. You know, last week we were talking about the market, and we were talking about how the flow-through was and the velocity of the market, and we made the comment that the upper bracket homes had slowed and were selling slower than homes more in the mid-price range. So just as a curiosity, this morning I got on the internet, the intranet, got on the MLS, and I was looking at homes over $900,000 in the 7-county metropolitan area. There are 370 homes over $900,000 for sale in the 7-county metropolitan area. I did not include to-be-builts or new construction under construction. I did include completed new construction for sale.
Okay.
And so 370 of them. And this week, last 7 days, 35 of those houses sold, so it's 9% of that inventory moved through. So then at the same time, okay, well then let's look at under 900,000. For those of you from Iowa, that's 899,000 and lower.
Thank you.
There are 1,790 homes for sale in that area, same criteria, no new construction to be built or anything like that. 487 of them sold, so that's 27% move through on that inventory. So clearly, it's just about 3 times as much. Actually, it is 3 times as much if you do the math. 3 times faster move through on that property. Not to be, I guess I'm not surprised at that, just because there are fewer people who can afford that price point, and so you would expect that to be right. But there's also fewer homes too.
Not a lot of homes. That's a shockingly low number of homes.
It is surprising,
I would think, right? And where are those located? Is it all over Metro?
7-county metropolitan area.
I
didn't. I could drill down to the zip code if you'd like, Kelvin.
It would be interesting if you could do that.
Yeah, in a later show.
But even parse that further though, like homes between 500 and 900 and 250 to 500. Certainly with 300 and 355, 360, somewhere in there, the median sales price in the Twin Cities area. That price point in and around there, super competitive. I had somebody reach out to me this past week, having trouble finding something, looking in around 350,000. Not only trouble finding something, but finding something in the location specific to them, and then something that's not in multiple offers, because around that price point, it's very common to be competing against other folks that are also looking for
well, and the multiple offer thing, I mean, I've heard that so many times from a buyer. I don't want to get in multiple offers. It's like, well, then you should probably wait a couple years before you go looking for a house, because if you're looking in that price,
but like we had talked about, I mean, we've talked this spring on, and even last year and the year before, the FHA buyer, the the down payment assistance buyer. The spring market is not really your market to be shopping for a house, unfortunately. That's just kind of how it's been. It's a little bit better, I'd say, this year, so it's not as competitive as it's been the last 3 years. Certainly not, Dad. Come on. There's not 95 showings on most properties. You're not
depending
seeing
on the price range. We put one on Friday. We had 50
It's not
showings.
as commonplace to have 125 showings on a property and upwards of 20 offers. I mean, we're just not seeing that same type of rapid market. Now, are there instances where you put a house on the market where you're going to get 45 or 50 showings? Sure. Are you going to see 25 offers? No. Will you see 10? Maybe
11.
11.
Sure, that's possible, but that's not the norm. Where almost every home we put on the market for a period of time, that was the expectation. So it's depending on the scenario and how you slice it and dice it, you might find yourself in that situation, but it's certainly not as common. So this year is a little bit better than it's been over the last 3. So if that's the case, and you know that you have a little hair on your transaction, meaning you got down payment assistance or not a high down payment or, XYZ, you can't be as competitive in a multiple offer situation like, I must have a home inspection, which is a weird thing to say because we all would love for you to have a home inspection. But the reality is removing contingencies helps you in a multiple offer situation. Yep. So that's just an example. Or you don't have a lot of cash to cover an appraisal gap. Even in this market, sure, if you really want the property, you got to do a lot of these same types of things that we've been doing over the last 3-5 years. So that being said, middle of the summer, fall, and into the winter time is where you should say, okay, I'll focus my efforts. Sure, now I'll take a look. If something's available, you want to go look at it, but know that you're not going to be as competitive. And an environment where you can be a little bit in a better position to, get a property, it's in those lulls.
I think you're going to find that throughout the balance of this year, if you're in that 400 and under single-family home market, I don't care when it is. It can be October. You better expect to be in multiple offers. I just think you're going to. Will it be 20? No, but it's going to be more than one. I guarantee you, because the inventory levels are so low. Unless something drastically happens with that, the inventory levels are so low, and there are still a fairly decent buyer pool out there looking for that property, and they want the property, so they're going to bid on the property. Your point about the financing objection, though, is spot on. In fact, the National Association came out this week. They're going to have they've approved now mandatory training for agents because agents are eliminating offers based on financing. And so they're doing some training on that to say, these are perfectly good loans. But the fact of the matter is, as a representative of the seller, my job is, as a listing agent, is to protect the seller and accept the offer that is most likely to close. And certainly a 30% down conventional 30% down conventional financing is less risk than a 100% financed VA loan.
Right, and I just took one of my final CE classes, and it was regarding something about discrimination at XYZ. One of the criteria for discrimination was choosing offers solely based on financing and the convoluted way they came to that conclusion. And, I can tend to disagree with that. I think you have all walks of life looking to try to gain access to funds to buy houses when they're first starting out and trying to buy their first home. So, certainly you can find an alley to get yourself to a space where there's a certain group that might use down payment assistance over another. And I think that's super convoluted to say that there's discrimination based on that fact. And I just don't agree with it.
I don't either.
I think that you're looking at the offer holistically and saying, as a seller representative, how is this going to get to the finish line? Like, which one is most certainly going to get to the finish line? And that would be a cash with large earnest money, no inspection, no appraisal because it's cash, etc. Like, that's what you're basing your criteria on. You would have to point the finger otherwise, which, you're not going to get involved in all that.
But that's cash only. And so once you're into a situation where you don't have a cash offer, then I think you guys need to look at all these things equally and I think discriminate's a bad word, but you have a VA buyer, somebody who sacrificed and worked and did their work for the country, and
Okay, so now
you're
you're not being objective anymore.
No, now you're
just what you said there. Then now I'm choosing because it's a veteran.
No, it's because
and
it's
I don't disagree with we want veterans to own homes and all that stuff.
Right.
But what you just said is not black and white.
Because the guy with 30% down may be a vet too.
Yeah, maybe. Yeah,
You know.
but I'm just saying when you see VA financing, a lot of people in your industry will set that aside. A VA loan is an awesome loan.
Well, I'm sure it
Best
is
loan.
from the buyer's perspective.
And if a loan officer is doing their job, so you assume loan officers aren't doing their job, a VA loan at 0% down is going to close just like a 30% down loan is.
Yep, and I don't disagree with
Both
you.
gonna
There's just
close.
more hoops to get there than a conventional loan.
You have to underwrite both.
And I
You have to have
realize
an
that,
appraisal for both.
my experience tells me that an appraisal on a VA loan is going to be more troublesome than an appraisal on a 30% down or 20% down conventional loan. It just is. It just is.
VA isn't. FHA maybe.
No VA. You know, the last 3 or 4 VA loans that we've done, homes offers that we set, there's always a work order. There's always something. With
Interesting.
That. Yeah.
I don't.
Well, we'll continue that debate on
Yes,
the other
we will.
side of the break here. This is Real Estate Chalk Talk. You are listening to Real Estate Chalk Talk with the Hittner Group at Coldwell Banker. Log on to our website, hittnergroup.com, HITTNER group.com, or give us a call, 612-627-8000.